eyes and ears. All right, the review for our chapter 9 and 10 test, which will be our test 4, accounts receivable, accounts payable, the term subsidiary ledger, controlling account. Make sure that you look at the vocabulary for that. The accounts receivable, are those customers or vendors?
Customers.
Customers. They've made a promise to pay us. Accounts receivable is what type of an account? It's an asset. Accounts payable, those are our vendors. We've made a promise to pay them. We've purchased something on account. It could be something that we're going to sell to our customers, but it also could be just supplies or equipment. It doesn't just have to be items that we've purchased for resale. The controlling account, we've had those controlling accounts since the very early chapters. Accounts receivable controls the subsidiary ledger for all of the accounts receivable, all of our customers. The total in the controlling account, accounts receivable, should equal what's in the subsidiary ledger. What is the form that we have to prepare to show that total that matches what's in the controlling account? Schedule of accounts receivable. On the papers that I graded and just gave back, make sure at the total that it says total accounts receivable. On the schedule of accounts payable, make sure it says total accounts payable. And you need your dollar signs. A couple of you forgot the dollar signs. I didn't take off very many points, but it wasn't a 100 if you forgot the dollar sign. So you need the dollar sign on the top number and a dollar sign on the total. Journalize the transactions. Again, you're going to see some regular transactions mixed in with your accounts receivable and accounts payable. Remember, we'll use the diagonal to indicate that you have to post that twice, once to the controlling account and once to the subsidiary ledger. Someone asked me the other night from the online class why we put the check mark for the accounts receivable and accounts payable. Why do we use the check mark when we're posting?
To make sure that we did it, that we did post it successfully.
But why don't we use a number? Simple answer. Why can't we use a number for that?
Too many numbers on the
Like the subsidiary ledger doesn't have account numbers.
This book didn't give us account numbers. Usually they have account numbers, but this book doesn't have account numbers for our customers and our vendors. So we have to indicate some way that we posted it. They had account numbers, we put an account number there. But we didn't have account numbers, so we're just using the check mark. All right, so that's the reason. This book just doesn't have account numbers for those subsidiary ledgers. So it really was a simple answer, right? If I asked that on the test, you know it? Okay. I went up just a little bit far. When you were working on Paula's, I threw in some of the petty cash transactions. Do those ever go in the general journal? No, they go directly into the auxiliary petty cash record. The form that I really don't like, I would have to change that if I did the petty cash for a business. I don't like that one. I would change it. I don't think there's a place at the bottom for you to put your totals. You just have to say how much you started with, how much you spent out of that petty cash and what you have left. So it's just a little calculation that you're doing at the bottom. Does it always equal? We might have a cash short, a cash over. So when you get to the final exams review, make sure that you look at that cash, what was the official name of that? Cash short, cash over, I think, was the official name of that account. Because it may not always match up. Why don't we put those transactions in the journal as we're taking money out of petty cash.
That was already established outside of the ledger or the journal too, so.
It
yeah,
was.
check it there.
When we first set up or established, is the word I think that I have on the test, when we established the petty cash, we took it out of cash, we probably wrote a check and got the cash and put it in that petty cash box. It could be in your file cabinet, it could be a little safe, it could be a little cash box, it could be a zipper bag from the bank. Mine's in a zipper bag. You know, the little bags that you can get from the bank. They used to be free, now I think you have to pay for those. But it's just money that you've taken out of our cash account for just incidental purchases or incidental reasons that we need to have some cash. What are some of those reasons that we could use the petty cash?
Postage.
Postage is probably one.
Like tipping the pizza delivery guy.
Tipping the pizza guy, that's right. Maybe even taking the money out to pay for the pizza, because you don't want your employees to be out the money if you ask them to do something for you. So petty cash, I think it's good to have cash on hand. You don't want to have a whole lot of cash because again, it could disappear, couldn't it? Just like your stamps. I mean, they could disappear. But it's always good to have the petty cash. So those transactions never appear on the journal. They're just going to go to that auxiliary petty cash record. Look at the other transactions, prepaid rent. Remember, it goes into that account, prepaid rent. It doesn't go into rent expense. Purchases, purchase supplies. And when we purchase supplies, we're putting it into that asset account, supplies, office supplies, or just supplies. Accounts receivable, accounts payable, sales and purchases returns. What kind of an account is sales returns and allowances and sales discount?
Contra cost.
Contra revenue.
Contra revenue. Because sales is what type of an account?
No.
Sales, fees,
Revenue.
okay? Don't forget those basics, because you're going to see those when we take the final exam. It's not too early to start going back and looking at the chapter summaries, right? We haven't used some of those things for a while, but you're going to see some questions all the way back to chapter 1. Post and record to the appropriate accounts, the 5 steps. Please pay attention to that. The last step is to bring the account number back to the journal as you're posting to indicate that you're finished with that posting. When we did Peachtree, as soon as we hit the save, it posted it for us. It made it so much easier. We did Peachtree, Atlas, and Zell Tuesday night in the online class, and several people have emailed me to say they loved that, especially the posting part. I mean, that just makes it so much easier. But we have to do the paper and pencil so we know what's happening behind the scenes with that computerized accounting. Posting the totals and individual entries from the journal to the ledger accounts, the general accounts receivable, accounts payable, subsidiary ledgers, and then accounts receivable and accounts payable, the controlling account. Know those terms. It's this one right here. And make sure that you can prove your totals. Where do we increase an account?
Normal balance.
Normal balance.
Normal balance item. Where do we decrease an account?
The opposite.
Opposite the normal balance. And then know the terms of the sale. What does this one mean?
2% within the first 10 days.
2% in the first 10 days. It's due in 10 days. And then what does the N30 mean?
That the total balance is due 30 days from now.
In 30 days. Okay. That's where the knuckle process will come into play if you're trying to determine 30 days or 31 days. That'll be important if we're trying to calculate that. Any questions about What's going to be on that test? 9 and 10. I should have some 100s on this test. Paula's is a good review for the test, although Paula's is probably a little trickier than any of the assignments for 9 and 10. Would you agree? The transaction on the 14th, the transaction on the 28th, where we had a sale and we had sales tax and then we had a discount. One of those we even had a return. When you're calculating a discount, we don't want to calculate a discount on the sales tax. And if we have a return, whether it's something that our customers returned or something that we returned, and there's a tax, we want to make sure that we give that tax back to our customers. And if we're returning something, we want to make sure that we get that tax back. Any specific questions about 9 and 10? No? So we're going to have 100s? I think you could. I really do. Go back and look at the terms and read the summary, the chapter summary.